Let me start by saying that I'm not going to tell you how to invest. Any experienced advisor will tell you that what to invest in is always personal. It's about your goals and what you want. Really, there's no one way to invest. Investing is a broad term. To invest is to save money or purchase a thing that potentially earns more money in the future. Anything purchased that can earn money is an investment. A house is an investment. Your baseball cards are investment. But really, when we think of investing, we think of investing in financial assets, stocks, bonds, bank deposits. What Investopedia defines as tangible, liquid assets that get their value from a contractual claim. That could be a share of stock, a unit of ownership in a company or an organization entitling you to a share of a company's earning or dividends. It could be a bond, a debt security on a short-term project, or, an agreement to loan money to a company or organization with them repaying you the principal and the interest. You can also invest money in an investment fund of pooled money toward a professionally maintained fund of diverse assets like a mutual fund. Instead of one share of stock in a company, you invest your money in a mutual fund which uses your money to invest in shares of stocks in multiple companies. A lot of these terms and investment vehicles sound complicated. Check the description for more handouts and information on some of these investing terms. What's inherent in an investment is risk. There's always a risk of losing money you invest in, and it's up to you to determine your risk tolerance. Consulting a financial advisor before making investment decisions is strongly encouraged. So let's say you've budgeted your money the way many experts believe you should. First, making sure your income pays all your bills, all your expenses. Then some of the leftover money toward an emergency savings, a rainy day savings account. Now that you have maybe you have a little bit of money after that emergency savings, you can put that towards growing money for, a particular goal you have, like retirement. The main resource I encourage you to check out is Morningstar. This investment research center includes articles, tips, fund analysis, and calculators for goals like retirement. And it's free with your DeKalb library card. Using Morningstar, you can look up stocks like the Walt Disney Company, or even mutual funds like the Fidelity S&P 500 Index. These are just examples, not recommendations. On a company's page, you can find factors like price per share, trailing returns, which is just the percentage of return over a span of time, information on dividends and splits, balance sheet, cash flow. On a mutual funds page, you could find these factors plus, expense ratio, which is the amount going to administration and stewardship. You can look up asset allocation, or load type, which tells you how much of the commission will be paid out. All of this information gives you data you can use to make decisions to gauge if the risk of investment is worth it for these organizations or funds. When you encounter these terms, as a consumer, you should research what they mean. So Morningstar will provide some research articles to help out with strategy and these basic terms. I also like Investopedia, which provides definitions of these terms. I also use Nolo and the For Dummies book series because they provide really in-depth information. I'm going to have some recommendations in the description. When you feel comfortable and ready, you could talk to your banking institution or a brokerage to receive advice and to invest. Oftentimes, these brokerages are going to charge a commission or an upfront fee. You can also invest using an online brokerage, which may or may not collect a transaction fee. Usually, this brokerage will ask you to choose a contribution plan, an individual retirement plan like a traditional IRA or a Roth IRA, for instance. These brokerages will serve as a holding place for your contributions. For information about contribution plans, check out the Invest in Yourself slide handout in the description, and the description will also have more information on websites that evaluate and rate online brokerages. These are all tools. Like I said, all investing is risky. You're trying to hedge against this risk by getting information to make sure that your choices are right for the goals you have. So use all of these tools and resources to invest in yourself and invest in your long-term future. Thank you for watching. Don't forget to subscribe to our YouTube channel and our Facebook page.